Good morning, everyone. And we're here for the open here on NQ. Before I get started with any type of analysis, I just want you to take a look at the risk disclaimer at the bottom of the window. Trading futures is risky. It's not suitable for everyone. Anything you see on the stream is purely for educational purposes. I should also flag that the stream is about 8 to 12 seconds behind live. So anything that you see me doing is happening already in the future for you as you watch the stream. So with that out of the way, the market sold off overnight. I believe there was potentially some news overnight. There's still some tension going on in the Middle East. As I've mentioned on the stream before, not a news trader, but do keep an eye on the general, uh, I don't know, the general buzz around to kind of know what's going on and what's moving markets. So a combination of instability in the Middle East. We saw oil pop yesterday. I believe there's a few energy stocks that are up this morning again. The NASDAQ is down less than 1%, but sold off pretty heavy overnight. We actually got below 29,000, which is where the point of control is actually sitting right now. And we've rallied about 300 points off of that. So a couple things that I'm looking at here. I do follow the opening range, the 30-minute opening range, so you won't see me touch anything for about a half an hour. I just like to watch the market settle in, and um, I don't need to be touching anything until the market has kind of showed me what direction it wants to go. On a higher time frame, we are out of this week's value. We have a little bit of a double distribution weekly profile happening. So the point of control still remains up close to 30,000. There's a second high volume node that is almost a secondary point of control that's sitting around 29,390, 29,400, which is also right above the edge of value. So yesterday and kind of barely in the overnight session, buyers tried to hold just below the edge of value and below the previous day's low. And then we got this much more aggressive hourly selling candle around 2 or 3 a.m. in the overnight session. And now we're trying to rally back up to this same level. Around 29,380 is the edge of value on the underside for this week. It's also overlapping value from 2 weeks ago, and if it gets any higher, it will be an overlapping value from all 3 weeks. So we are still kind of sitting here in the midst of what I would call balance. We're out of it right now, or just like starting to climb back into it from 2 weeks ago. So there's a lot of volume up here that is kind of acting as a magnet to pull things back up. So while it looks like sellers were very much in control overnight, we have pretty much V-shaped our way off the lows and back up to above the session mid. So I like to think of, the session mid as kind of a football field. So if we're above the session mid, overall, I think there's still like a sell bias going on, especially with as much volume as was done down at 29,000. But you have to respect the fact that buyers have been able to push it up off the lows and take over half of it back. So that puts pressure on sellers to get this thing to roll back over. And if they don't, then, once it gets above, this is the Globex open here. I think that if, buyers can get this back above like 29,400, which is back into value, then I think you start to look at maybe some of these tops here at like 29,550, 29,600, if buyers are going to continue to push. What I would like to see, because I think it would be a cleaner trade, is during the opening range getting set, getting up closer to this edge of value and getting rejected, and coming back down closer to 29,000 during RTH. But right now we're a pretty good distance. We're about 300 points away from that. So this is a some scenarios that I like to watch. I'm probably interested in longs above the Globex open, and I'm probably interested in shorts if we can't hold up here. So that's kind of what I see. Um, and to just flag a couple of interesting, potentially scalpable levels, something that I would hold very briefly just for like a reaction. Um, this area here where we have this pink dashed line, which is a large sell imbalance as well as a high intensity delta zone from the buy side, creates kind of this zone here from 29,180 to 29,160. So it's pretty tight. It's like a 20-point area. And we'll see this if this comes down here, then I might look to scalp this and see if I can scalp it from here, maybe back up to the session mid for 50 to 60 points. Further down, we have these down here right around where the market printed some exhaustive signals overnight. But right now, buyers seem pretty intent on trying to push this higher. So we'll just have to see how they play out. The other thing to note, if you haven't been trading this week, the volatility, particularly in the NASDAQ, has been quite astonishing. I will be honest and say that I traded yesterday morning and I got whipped around pretty good just on one micro. Um, a lot of trades where I was right and they just barely came and got my stop. My stops just weren't quite wide enough yesterday morning. And there's days that that's just going to happen and you kind of have to like chalk it up and say, well, that's how it played out. And I'll potentially look at using wider stops the next session. But this is an environment where you can both make a lot of points and you can also just get chopped to bits because it looks like it's moving a bunch, but it's just moving a high point number in a very tight range, which makes it hard to control risk. You have to have much wider stops. So size down, don't be a hero. Trade your account for tomorrow and the next day, not necessarily just for today. You want to limit the amount of damage. If you get stopped out, then it's okay. Just know to walk away. But sellers getting a little bit of something going here or trying. But we're still seeing some pretty aggressive dip buying going on. Starting to get another high volume node here at 29,300 from the RTH open and from the overnight session. So I think there's just a large single delta print around 29,000 that's making the point of control be down there. But 29,300 is actually where a lot of the volume has concentrated so far. So we'll also say the tricky thing for sellers is looking at this intraday profile from the overnight session is you have a lot of low volume nodes in here, like pretty distinct ones. And it gets a little messy below 29,100, but these are some decent areas, like especially underneath 29,175, like the area we kind of already talked about as a potential place to hold. So it's like when you don't have a very like what I would call like a flat profile, right? Like you can find distinct shapes in it. It's just a lot of places that the market can find support on the way back down or up, depending on what you look at. But like to the upside, I would say it's a lot flatter. Like you don't really have a lot of distinct shape here. You don't really start to get into like what I would consider a low volume node until like 29,400, and then up into 29,500. So from a volume profile, I think it's easier to go up from here. Just talking about the overnight slash, the profile that we see here, not necessarily talking about the higher time frame profile. But on the way back down, I just see a couple of areas that the market could definitely try to hold. So just kind of sitting here at neutral, and they're going to push to new RTH highs here. But you can see just how fast this is moving. I'm on a 500 fixed volume chart, so it's not time based. So like every time 500 contracts is traded, you get a new bar. But from here, which was 839.38, it's like a 1 minute move that is 65 points and counting. So manage your risk accordingly. I would not be surprised that um, if I get into something, I would not be surprised to get stopped once or twice before the idea plays out. And sometimes that's just how it works. But I have about another 20 minutes until the opening range gets set. And that will be when I start kind of looking and hunting for trades. But I will also say that like I'm not really when I say that I'm an opening range trader, like I don't actually probably trade the opening range like a lot of opening range traders. Like I'm not necessarily looking for a distinct opening range high break or an opening range low break. I really use the opening range as kind of a like reference point, particularly on the NASDAQ. Our range from the overnight or total is 28,900 to 29,750. So you're talking about like 700-ish points of range. And if you don't have reference points, like, a lot of these, like, this is the overnight open, the Globex open, this is previous day's close, this is the high. These lines here are just showing the edge of value where the profile is. So having some of these lines on your chart doesn't mean that like if it comes down to the mid that I'm automatically going to assume that support or the opening range low is going to break and go lower, but it's a reference point for me to be like, okay, we're above the mid for the whole session. That gives buyers an edge. We just push the opening range up higher here before it's actually set. But, that's another check mark for the bulls. And we're almost above the previous day's close. So any selling that we've done overnight, like anybody that was, shorting into this is, effectively, depending on where your entry was, is having to cover or is underwater. So the more higher lows this starts to put in, the more pressure it puts on sellers if they can't get a place where they can cover, they can take profit. Um, and one of the things that I feel like I see a lot in these kind of like V-shaped up moves is they don't tend to end with like a little trickle of volume at the end. It's usually higher low, higher low, higher low, higher low, and then some kind of sort of exhaustive final push where sellers just kind of can't, take it anymore. Because if you're shorting into these pops and you're not getting far enough back to scalp them out, if you're not stopping out, then you're just adding more pressure to the market to stop out at a higher price. So um, some of these sort of grind up moves, um, I find eventually have kind of a pressure release. And, trying to fade it before you see that pressure release is usually a bad idea unless you happen to be really good with your entries and your exits during those small pullbacks. Also, as they start to fill out some of this, if they pull back a little further and they start to fill out some of this price between 300 and 350, you start to get a very distinct shelf here below 29 300, which is also the point of control right now. So um, buyers working on putting in another higher low, and they're going to make a new, maybe make a new high here, which we had a pretty decent V-shaped recovery yesterday. Um, Pretty hard sell off from the overnight and then during RTH, and then took back just about half of it, almost got to the session mid, and then just chopped for like an hour before finally breaking and going lower again. So um, I don't know if we'll see the same type of move today, but sellers really having a hard time keeping this down. Um, there's a little bit of weakness on that last push from the buyers. That's why we got this little purple circle here at the top, or purple bubble. Um, you can see it pull back from there. So that's our phantom indicator, which looks for basically aggressive pushes in either high or low that isn't backed up by the underlying price action. So could be making a high, like a new pivot high on negative delta, or making a new low on positive delta. So um, sometimes the reactions can be quite fast to that. Doesn't necessarily mean that we're gonna like put this in and then, you know, roll over for a giant reversal, but it's a little bit of a warning sign that um, that one side is getting a little weak when it should be strong. Seller's starting to get a little bit here. You can see the candle coloring starting to fade from the bright green into the purple, and now getting to bright purple. So some aggressive sellers stepping in there. There's basically this pop in the overnight before we sold off really hard. And that's kind of basically what they held right in front of, as well as the Globex open and previous day's close. So remember, talked about on a pullback, getting into this low volume node here and getting below the point of control and seeing if this holds somewhere in this area. You know, it's still a higher low unless they get it below 29 250. So it's about a 100-point pullback though. Our volatility is still incredibly high as that gets almost a instantaneous 30-point bounce off the point of control. And also, if you're watching, my DOM is active. My depth of market is active. You can see the numbers changing down here. Um, I put my DOM where I'm interested in potentially putting on a trade. And since I'm not really interested in putting on a trade before the opening range is set, I just have it away from price. Um, I feel that the depth of market can be a really useful tool. I also find that it is a little bit of a trap for human kind of monkey brain behavior, which is like this fast moving thing that I can potentially make money on. And, maybe I watch it and I think, oh, I can see like buyers holding here or sellers holding here. And um, if it's not in an area that, is supportive somewhere else, like you're not looking at a specific level like we were just looking at. That was a really nice hold below 29,300, like we just talked about. Um, but like you end up just looking, in my opinion, you end up looking at noise and you have a higher tendency of pushing buttons if it's like in your face and moving around. Like if I move this up here, we can see this just, you know, bouncing all over the place. Um, I might look at this and say, oh, look at this large, delta volume print over here. Maybe it's going to hold there. So I just find that that I get myself into trouble if I have that up when it's not an area that I'm looking at. Um, so going to scroll back down to where I belong. That was a nice bounce, but it got rejected at the Globex Open pretty much to the tick. You'll also notice that the candle coloring has not rolled over, so it still remained the sell color, even though, we popped it almost back here. So that just means that the selling is much higher volume and the bounce was a lot lighter volume and a lot lighter aggression. So you can see that in the overnight session too, right? So like we sold off here, got exhaustion, got a little pop off that exhaustion. Candle coloring never rolled over, couldn't get it back above this heavy sell zone, and then sold off again. And only when the candle coloring shifted did we actually start to get a move up as like the price action volume and delta all started to align in the buyer's favor. Then we started to push. So this is another instance here where we pushed down and um, didn't get anywhere. You got back up, but they didn't actually push that volume and that aggression back to where it can be, a more buyer friendly color. So if this wasn't pre-opening range, that would have been something that I would have been interested in fading. Seeing that candle coloring not able to roll over on the pop back up just tells me that buyers aren't super aggressive there, or that sellers are more aggressive. But another 5 minutes before the opening range gets set. Sellers putting in a little bit of work here. If buyers can't get this back under control here, if it can't hold above 29,300, you've kind of created this really large low volume node all the way down to 29,174. So price could move quite quickly below. I could just probably end the sentence at price could move quite quickly. These are 60, almost 70 point rotations here. So I'll also say it's pretty rangy, but it's not as rangy as I thought it was going to be. Like it's basically a 200 point opening range, which is not small, but that's more in normal territory than like what was yesterday's opening range? Opening range high was 29,685, 29,425. So it's similar-ish, closer to 300 points yesterday. This little reversal marker is, or I should say, it's not technically a reversal marker. It's a weakness on a push up that you could reverse, but turned out to be pretty good. You know, even if you just got in after the candle change, you can get 40 or 50 points. My stop would have been probably entry would have been break below the zone, and stop would have been back on the other side of the zone. So it would have been real tight, maybe getting stopped on the other side of that zone. They didn't quite get it back through, but I wouldn't have been ultra excited about, like, unless I got a really good entry, wouldn't have been ultra excited about shorting down into the point of control as we see them hold it a second time. Buyers really stepped in right there at 29,300, creating this very distinct volume shelf here. So it's good for the buyers in terms of, if they want it to go higher. Good to continue to keep holding that area, but you're also making what could potentially be a point where if the market breaks below, it's going to fall. It could fall pretty quickly through that low volume area. So you can see the candle coloring just barely starting to weaken there. You get to this gray color as buyers finally start to push this back up. Solid hold there for anybody um, that took that trade. Basically got two looks at it right there at 29,300. Now pushing almost 80 points off of there. And looks like they'll probably get a new high here. Oh, another flag on weakness. Some pretty aggressive sellers between the Globex open and yesterday's close. Opening range should get set here in about 15 to 20 seconds for me. If you're watching, you're about 10 seconds further in the past. So we're really sitting pretty squarely in the middle of value for the whole session. Doesn't make me super excited to be taking a trade in here. Um, but I would say that given what we've seen so far, I would say edge is still with the buyers, having taken back over half of the overnight move. But having a hard time getting above this level. It's getting rejected at the Globex Open. I think buyers have the edge, but if we keep struggling with this area, I might try to scalp this back down to 29,300 again. I don't particularly love how close these two pivot highs are. I feel like those usually get taken out, but sellers really not wanting to let this go higher. Stop would be like 29.85 if we were going to try that. But looks like they might just go ahead and sell it without me. On the higher time frame, this is like right at the edge of value from this week. 29, call it 350. That's two very scalpable moves after these phantom prints here. We had one over here. It just disappeared because we only have a small number on here. And so they get replaced with um, the next strongest one. And back to this 29,300 level. I don't know if it holds a third time. Like this is your shelf. If buyers start to lose this, I think you'll see movement to the downside for sure. On a push lower, I think the first place that I would look at would be around the session mid and previous day's low. You have some levels in here to see how price responds. But this is actually a kind of surprisingly boring session so far. I think the market is getting a lot of mixed signals from overseas. Not going to comment on the politics of it, but when we gravitate between ceasefire and is it a ceasefire, and then there's still news coming out that there's still military activity happening there. I think the market gets into this kind of holding pattern where it's like, well, I need more information to figure out whether we're going lower or we're going higher. And as of this morning, it's really just creating this super condensed, choppy environment. Like you got all this movement down and all this movement up from the overnight, and now you're just going sideways here during RTH. So seems like what's getting rejected right here is the edge of value for this week. That's what buyers are actually having a hard time climbing back above. I personally don't think the 29,300 is going to hold again. So I'm kind of interested to see if we can get over 350. I'm interested in potentially looking at a short trade just to scalp it and then see if it comes back down to 29,300. Because if I'm anticipating that that doesn't hold a fourth time, then the risk to reward starts to look pretty nice if we can get down to 29,250. Stop would be on the other side of this zone, so like 385-ish. But to do that, I would like an entry somewhere in the high 50s or mid 60s. And want to see what that looks like if it comes up here, but they may just roll it over here and not even give me a chance. Sort of the other thing that's in the back of my head here is when we look at how choppy it is, I don't know about you guys, but I absolutely hate being in positions that don't resolve, whether with a stop or a take profit pretty quickly. Like I hate just sitting there waiting for the market to do something while I'm in position. Um, and so it's like if I look that it's choppy and it doesn't want to move, it doesn't particularly make me want to be in position because um, right now I'm flat, but I can, if I watch this and it's not doing anything, I don't want to be in position while it's not doing anything, just waiting for it to do whatever it's going to do. So, I mean, look at the compression, just smaller rotation, now an even smaller rotation. You're basically just trading right in place. You're probably going to end up moving the point of control for the week from up here at almost 30,000 down to this value level, would be my guess if we keep trading in this area. Really kind of tricky though. I like to think of levels typically holding, uh, you know, two times, and a third test usually isn't quite as clean. So it's like we have three tests that are actually pretty clean. Second, this bounce here isn't so strong the next time. Um, but then on the upside, you basically have two tests of this exact level. So I would expect a third test to get a little messier, maybe to the upside, but I'm just going to take a quick peek um, at the overall market. I just have, I don't really watch stocks to be like, oh, Apple is up and that means the market's going up type thing. I have a watch list on Thinkorswim that's like all of the S&P's top 500 holdings, just to give me an idea of like where everything is at. So right now, it's a really it's a really weird kind of mix. Most of tech is down. Most of the big tech names are down, but then a lot of staples and Dow stocks are also down. It's really just communication stocks that are barely up. Nvidia, which is basically at break even and not selling with the rest of tech, which is probably what's holding the market up at the moment. But here's that break below 29,300. Let's see if they hold it again. Yeah, it didn't hold that time. We have chopped a lot so far, and usually chop just creates more chop. So we have this nice impact level, the sell imbalance from the overnight session at 29, call it 180-ish, and it's actually sitting right at the edge of value for the overall session. So that might be the first place that I actually look to see. Like the mid is in here, the previous day's low in here, and the opening range low is there. So if it's able to get through all of those levels, that seems like a reasonable place for some profit taking on the short side to take place and potentially some dip buyers stepping in. I think this area here, like in between all these, is just too messy to look at. So I'm actually just going to scroll my depth of market down to where I'm interested in potentially executing, even though it's still pretty far from price. Yeah, just like this area. Also, I'm like streaming now, but sometimes if I'm just like trading by myself and not doing it live, then I know that I'm not really interested in, I already said I'm not interested in doing anything in here. So, that means that like I can have my DOM put over here, be doing something else, and then if I see my DOM start to light up, then I know like, hey, you know, price is in the area that I'm interested in interacting with it. Um, it's like its own little alert system. So broke 29,300 and then just rejected it on the way back up. But I got to be honest, this is not actually. I messaged one of my friends this morning and was like, oh, man, after yesterday's session and just like the news cycle and everything else, I'm not super thrilled to be getting on to trade live. But this has actually been a fairly controlled session so far from both sides. Um, we're not seeing the kind of rotations that we saw yesterday. So I don't know if the market just kind of exhausted itself in the overnight. I mean, you've had one V-shaped recovery here, and you had, one V-shaped recovery yesterday, and you kind of almost had another V-shaped recovery during the Globex Open before it sold off again. So um, sometimes I think the market is just, I think, I mean, obviously the market itself is just participants. I think participants get, I think they get tired. Um, people get frustrated at price not moving, people get chopped up, and then you just get less and less people participating, which just then makes it more likely to chop and less likely to get a directional move. So it's not to say that we can't see a directional move yet. We're sitting here at like 15 minutes after the 30-minute opening range got set, so like 9:15 Central Time here. Um, we're still inside the opening range. Neither side of the opening range um, has been breached yet. They're working on getting it close to the downside. And if we don't breach it within the first 30 minutes of the opening range getting set, so if we get to 9:30, like another 15 minutes, and they haven't breached either side, um, typically that just means that it's going to be a balanced day. And they call that A session, which would be the A period inside of B period. Um, or I guess backwards, it would be B period inside of A, if I can speak properly. So it would be all of the price action from B period, which would be from 9 to 9:30 Central Time, trading inside of A period. Um, it just means the market is consolidating, not really moving around. Um, there's a nice bounce off the mid to the tick. Already a 40-point move up. So far, these double, we had another phantom breakout here and one here. Those both proved to be quite good signals. Nice work for anybody that took those. Those were pre-opening range for me, or like one of them was right when the opening range was getting set. So not a trade that I'm apt to take, particularly the second one, because you usually get a pretty decent volatility spike just with when it rolls over to when A period ends. So and that's a solid push off the mid. They're going to get it back to 300. And that's an aggressive push. The other thing in play today is, um, not speaking towards politics, but I think that this administration has made it quite clear that they care about whether the market goes up or down. And so when the market starts to drift lower, um, there's definitely a headline risk here. I mean, you have a headline risk in either direction, if something happens in the Middle East, but um, the market is known to respond, um, to news out of the White House that makes it feel like or seem like the ceasefire is going well. So, not saying that this is what this is, but sometimes, I think algorithms react quite quickly to news that, and honestly, like there's multiple reasons that I'm not a news trader, and when I say not a news trader, I mean like, looking for a headline and then taking a position based on that headline. Um, Inevitably, we're all trading news of some kind. That's what moves the market around is, things happening in the world. But, um, the main one of the main reasons is, they have algorithms that can read and understand the headlines and take a position and start selling before you even knew there was a headline out. So you're fighting against computers that are a lot faster, with a lot more capital. And the other reason is that a lot of times the market doesn't necessarily interpret news in the way that we might expect it to. You might hear what you would consider a negative headline due to your own bias. Um, but the market has already either priced that in, doesn't particularly care about it, whatever it might be. And, now you're sitting there wanting to fade something or sell something, short something, and the market's like, I don't care. That was a silly headline. So you might get some kind of like, sort of quick pop reaction that just gets immediately snapped back. So, but knowing when you're trading in an environment that has headline risk, and technically we always have headline risk, but when we have known tensions happening overseas right now, um, oil spiking higher, tech stocks trying to sell, um, you just have to know that don't trade without a stop. Um, Really annoying to get wicked out on a news drop that you didn't know was coming, but way better that than to get trapped in position. So in this environment, like stop is a prerequisite, and I also have a flatten button. um, Buyer's doing solid work here, but still inside the opening range. I'm here till about 10 a.m. Central. Um, Not predicting that we, aren't going to break one side of the opening range, but this is actually fairly boring from from how I like to trade. I'm just sitting in the middle of value. This is a little bit better from the buyers though. Got some momentum. That's a really nice hold off the session mid. We were looking lower than that, and there wasn't anything like a delta perspective or volume perspective that I really cared to look at there. Um, and this is right back to that same edge of value level that we talked about earlier at 29,350. So far has been a bit of a brick wall for buyers to the upside. Honestly, we've taken so long inside the opening range. I'm probably more interested at this point in fading something if we get above the high and start showing weakness. I just think that we have so much volume down here, and this 29,350 level seems to be becoming kind of a magnet that the further away we get from it, the more likely I start to think that it's like we get a pop, run some stops, and gravitate back. So um, if we break the opening range high and start trading up here, I'm probably more likely to start looking for sellers stepping in than I am looking for continuation personally. Sellers unloading again at that 29,350 level. It's just getting very messy inside of here. And you won't see me take trades on stream just because I'm streaming. Um, you know, Trading my own accounts. So uh, the market's not going to move. or it's just going to keep trading back over itself. Like, I don't feel, they have casinos with slot machines that you can just like pull a lever and, see what random symbols come out and see if you make money. But because I think that that's kind of what this is in this area. Buyers have about another 5-ish minutes to try to get this to break out of um, the opening range, break out of A period. They want it. They act like they want it, but it's kind of a lid on 350. It might be one of those sessions where the good old overnight traders had a lot more fun than the RTH traders. Ironically, I feel like we've held some levels that I noted to myself as we were pulling back that the session mid might be a place that we look at to hold. Um, so, and we've seen a couple of false breakouts detected by ScalperIQ up here. So, but just neither side can get going here. Like that's to 29 250 and then it bounces right back to 300. I mean, that's a 50-point move in one 500 vol candle and it's still inside of range. See me shaking my head. I shake my head when we just, that level of reaction, like 75 points instantaneously, just reinforces how hard it is to control risk right now. And that was a decently aggressive move down that lost the point of control and started to head towards the lows. So, you know, if you chase that down and tried to short it, like, I don't know that I disagree with that analysis, but I hope you had a stop in place because just a missile coming back to the upside there. So as it sits right now, they have a couple of minutes, but basically 1 minute to try to get this out of um, A period to see if they can break the opening range, the 30-minute opening range. And it doesn't look like they're going to do it. They're literally sitting right in the middle, pretty much right in the middle of the opening range and right here pinned to the 29 300 point of control. So for the last 30 minutes of the stream or so, what I am looking for is still looking for one side of the opening range. Don't really care which to get breached, and to look for weakness from whichever side breaks from it. It's not an instantaneous type fade, so it's not like I'm looking for an opening range high and like putting an offer out here. Um, I think I want to see buyers get up somewhere, maybe up above the previous day's close. Then we get maybe like a candle shift or some other type of order flow signal to tell me that there's weakness. and then to trade that back down to 29,300, back into the middle of the opening range and back to the point of control for this session. Same thing, basically, to the downside. You know, I actually really prefer a downside break because right below opening range low, we have a nice level from the overnight session to look at. While for the overnight session, there's not quite as much from an order flow perspective. Um, you would kind of just be looking for general weakness once we got there. But you can tell even when I zoom out, if you get in close, the candle coloring is a bit more distinct. But if you zoom out, you can tell that like it's almost perfectly neutral. Buyers are going to try to push it here again, but um, we haven't seen one of those in a while. That's the first session in a while that I remember that we have a B period inside of A. Not very exciting for the streaming crowd, but yeah, this is amongst friends typically call it take your money mode from the market. Just enough movement to make you think it's going to go up. People thought, probably sellers thought we were going to get a breakdown here. Buyers thought we were going to get a breakout here. And instead, we're just going to sit right in the middle. And when I looked at like the S&P's top 500 holdings, um, Nvidia was I think the one green tech stock. It was only green by like not even a quarter of a percent, but it's a big holding in the Nasdaq and a big holding in the S&P. So it can provide quite a bit of support, relatively speaking. All right, so while I'm here, um, let me talk a little bit about the opening range and why you might consider using the opening range. So, first, kind of what is the opening range? So, the opening range is kind of an arbitrary selection of time. There are 5-minute opening ranges, there are 30-second opening ranges. I haven't really heard too much about opening ranges that are um, larger than 30 minutes, but 30 minutes is a quite common one. So it would be from the 9:30 open Eastern time to 10 a.m. Eastern time, the first 30 minutes. And so whatever high or low is made during that period would be your opening range high and your opening range low. Now, there's not necessarily anything particularly special about those, but from like a technical perspective. But what they do is they kind of provide um, kind of waypoints and points of reference for you when you're trading, both to think about, okay, we're below the opening range low, sellers are maybe more in control, or we're above the opening range high. Maybe this isn't a place that I want to be fading this. Um, they can also provide pretty good areas of support or resistance on retests. So, um, not an uncommon trade to see an opening range high break, the market trend up, trend up, trend up. And at some point, you get kind of a liquidation event and to come back down. And a lot of times, the opening range high is a good place to look at for a potential rebid. And the same for the opening range low. You sell off, you sell off, you sell off, and then when you rally back up, the opening range low tends to be a first place to kind of look at, as well as looking at, do we get back into the opening range, right? If you're below the opening range low and suddenly you get back into the opening range, anybody that maybe took the actual break of the opening range low is now underwater, or same for the high. Um, so there are traditional ways of, and lots of different ways to trade the opening range itself. I don't particularly trade it. I use them as points of reference. But some people literally do wait for an opening range high break, buy it on the break, put their stop either back into range somewhere. I've seen people do it as far as buying the opening range break on the high and then putting their stop below what would be the opening range mid, which would be the midpoint between the opening range low and the high. So lots of different ways you can play it. You can actually probably Google and find, or maybe nowadays Chat GPT, and find statistics on opening range strategies, um, and see if any of them, kind of speak to you. Um, when I first started trading futures, I I traded the opening. When I learned about the opening range, I was like, oh, this is so simple. I just buy it if it breaks this line, and I just sell it if it breaks this line. Um, and that worked a handful of times. And then I just found myself getting torn apart on like a pretty regular basis, as like price doesn't typically, uh, on a nice clean opening range break, you get like a clean break from the low and then, or the high, and then it gets further away and doesn't ever touch your stop. But what I found is that those clean breaks are actually much more rare than the other kind, which is to break the opening range low and then chop around a whole bunch and then eventually break. Um, and it became this sort of like really frustrating exercise of I would short as we broke, or I'd try to short a pop on the way back up. I'd get stopped out. I'd try it again, get stopped out again. And then eventually it would roll over. And by the time it rolled over, I was no longer a part of the trade. So I'm going to get a little bit of weakness from the sellers there right in front of the session mid again. That's what that little green bubble is. And if I was taking that trade, I'd probably be looking for 29,300 again. Um, and there it is. Um, there's been a few scalpable moves in here, but it's pretty gross. So that's kind of just a general overview of the opening range. There's a lot more nuance to it. There are 5-minute opening ranges. There are 30-second opening ranges. Um, for me, I already feel like I'm at max capacity for the number of levels that I have on the chart. But I have seen people put multiple opening ranges on their chart. So people, putting levels in for the opening range low, for the 30-minute opening range, as well as say the 30-second or the 5-minute opening range. I tried to trade, as we all do sometimes with trading, like years ago, I was like, there's a 30-second opening range. Like, I'm on it. And obviously, the 30-second opening range is incredibly fast and incredibly small. Um, and I just got whipsawed everywhere trying to like, sell the low, and then suddenly it's back above the high already, and I'm stopping out and reversing, and it was just a mess. And I was like, all right, I don't belong here. So the 30-minute is what I've traded for years. And when you trade the same thing for years, there's a way in which, like, when I look at the market, it just like my brain kind of like is like, oh, I know what this is trying to do here. Not like I predict the future, but like when I know what the opening range looks like and I see where price is at, I have years of experience of watching how price reacts to these types of levels. So if I were to like change over to a 5-minute opening range, it would be much more disorienting to me. I'm not going to apologize on the market's behalf, but not the most exciting stream you guys are going to watch here. For anyone who's new, who is not familiar with ScalperIQ, let me walk through kind of some of our core features here while price is attempting to get below the session mid and can't do it. So we talked a little bit about some of them. Let me just go through each. So the candle coloring is obviously the most distinct. The candle coloring is a composite is based around a composite between price action, volume, and delta. So delta being aggression, which side is crossing to buy higher or to sell lower. Um, so when candle coloring is strongly one color or another, that side has control of the aggression, the volume, and the price action, and the obviously the reverse for the sell color. And when you start to get neutral colors, where it's just kind of this flat color that's not bright one side or the other, we're basically just hung in balance and no side has control. You see some zones on the chart. There's one down here. There's one up here. Those are zones where there was super aggressive buying or selling. They tend to be areas of support on retests. So we see a couple here and here. The dashed lines are large sell or buy imbalances noted by their color. We talked a little bit about the phantom escapes. Those are the bubbles on the chart. So if price is trying to make a new high or a local high on negative delta, it'll flag the weakness there, and the reverse if it's trying to make a new pivot low on negative delta, then you'll get a flag there. The last ones to talk about are our exhaustion markers. We haven't seen any of those because it's so choppy right now. But you get these after a certain number of aggressive bars, and then the first time that price starts to cool off and that aggression starts to cool off temporarily, you'll start to get an exhaustion marker print. So we got one here, you got a temporary pop off of it, sold. You got another one here that you got a better, more tradable move off of, and then ultimately sold again. So that's kind of an overview. Seller's still attempting to do something here. I'm still looking at the same area. I'm still looking down here around 29,180. Look for a failed opening range low break, which they might get here. They're only 10 points away from the opening range low. That's the previous day's low right there at 29,210. But honestly, like I wouldn't be super excited about shorting through here. And it's just because there's so many levels to hold. You know, they held the mid for almost an hour. They just held the previous day's low. There's the opening range low right below that. Then there's edge of value below that. And then there's uh, our sell imbalance here at 29,180. So, you know, and we're just, you're already rotating. You're already back to 29,250. So I figure if I drink seltzer on stream, maybe I'll get sponsored by LaCroix. Even on even if you happen to be short up here near the highs, It's a lot of violent bounces to hold through. I mean, it's just not a linear, even though we're kind of selling now, like there's just not a linear move down. It'll probably wait until I get off stream here in about 15 minutes and then it'll do something really exciting, but that's just the way that it is. I typically cut off trading around 10 a.m. Central Time because that's starting to get close to 11, or that's 11 Eastern Time. And typically, as we start to get into what would be considered more like early lunch period, things kind of stop moving around and tend to get lighter volume. Also, this type of price action, I think, also lends itself to lower volume because, you know, it's hard to trade. Like that's that's ultimately it. Like if you're out there trading in a session like this and you just are getting super frustrated and getting stopped out, like it's not just you, you know, it's the environment. It doesn't mean that you're a bad trader. Um, Maybe the only part of quote bad trading that's going on is, not kind of zooming out to see how the market's actually moving. And right now it's moving in almost a non-directional, very choppy way. So there's the opening range low break. We're still looking about 15 points lower. They're going to come onto my depth of market here in just a moment. So we're going to see if they can get to this sell imbalance right around 29,180 and see if we see any type of responsive buying down here. And then we would be looking for, it's been so choppy on the way back down. I would probably look for just a scalp back to the session mid. Or at least at that point, I would probably move my stop into profit and look for back to 29,300. So there's that level. See how it trades here. You have a buyer stepping in there. You have another buyer down here with the 20 lots. I'd like to see a little sweep of this level first. So they held it to the tick. Yeah, go ahead. What's your question? Who am I talking to? Um, some people hide have their privacy set so that you can't see that they're actually viewing a stream at one time. So talking to anybody that's listening that has their privacy settings on. And we record snippets of market analysis for use on social media and for training videos as well. So that's who I'm talking to, as well as you. So we're going to look at a second test of this level. Held it again. So my trigger is going to be if we get back into the opening range, if we get back above 29,200. Actually, I'm going to walk that back. I want to see like if they flush this and then get back above this level, and that would probably be my buy signal. So you are getting some responsive buying here. They got just below that level and now back above. That was not a nice move. I almost bought that. Well, they held it for a second. This small dash line here is just the edge of value at 29,150, but they've basically been expanding value to the downside, and now they're there. I would still like to see them get this back above this level for a potential long trade, like that, but not like that. All right, we're long at 184. It's really choppy. I'm going to give it a 20-point stop. We'll look to see this get back into the opening range. And then maybe potentially get this closer to 29 to 30, which is the mid. And at that point, I would move stop into profit and look for a move closer to 29,300. But I'm willing to take this trade a couple times. Just aware that the volatility might stop us out. Nice push here. Back into the opening range for now. Somebody just asked if I was wearing a shirt. My shirt is right here, guys. Almost up to the mid here. I'm going to look for a push right above the mid. This is the session mid, not the opening range mid. I'll trade this a little bit more conservatively there. And we're filled. I'm canceling my stop. Waited all stream for that one. Waited all stream for that one. Nice little 52-point winner there. Somehow managed to not get chopped up. Ironically, didn't get chopped up today in a session that is way more choppy when I got how do I use delta zones? So delta zones tend to be um, areas that are support and resistance. Don't worry, guys. This thing will go back to 30,000 without me because I just exited there at the mid. I don't have the White House on speed dial, so they didn't let me know that they were going to drop some news there, whatever's going on. Anyway, so delta zones tend to be areas of support and resistance. You can see as we got back into these on these pops last night. And then they provide typically when they break above strongly like they did last night, if let's say I was interested in taking a long for this reversal last night, this aggressive move back through this zone and then this hold here would be an area that I would be interested in taking a long and then putting my stop somewhere just below the other side of the zone. Same kind of thing here. So when they start to get really wide, I don't like to trade them quite as much just because the risk is a lot higher. But little small ones like this at the top are more tradable in my opinion. There's lots of different ways to use them. These are the observations that I've had watching them for since we've developed this. But I think pretty often, pretty often people are telling me different ways that they use um, different parts of our tool set. So if it works for you, then don't change it. Don't listen to me. Whatever works for you guys. Nothing makes me happier than watching um, you guys make money, especially using the tools that we trade with. I'd be very surprised if they don't get this back to 29,300. I mean, this was 29,296 here. Um, I will have to say that those are my favorite type of trades. I think that hold was like for right at 1 minute, maybe short of 1 minute. Um, I am not somebody that likes sitting in position for very long. Um, so I'm always trying to look for I'm always trying to look for levels that I think are going to have a not just a reaction, but like I want a fast reaction. I want to be exposed to the market for a very short period of time. So that's kind of my ideal. So what we saw here in terms of like we had talked about this level earlier in the session. You have this sell imbalance from the overnight session. We held it a couple times and then they flushed it and then they got it back above and flushed it again. Um, so at that point, I just wanted to see it get back above. And to me, the risk to reward there was, we used a 20-point stop. So got just over 2 to 1. Um, almost instantaneously. So I don't know what this extra situation afterwards was, um, but they're already going to come back down again. So violent pops in a tight range, really hard to trade. It is really hard to trade in there right now. So contributing factors for taking that long were actually how much we're chopping. So I wasn't really anticipating a very like directional break. Um, was expecting us to sort of false break and then pop back up. Didn't think we would do it quite that fast or quite that violently, but um, sure did. All y'all showing up late and watch the last 5 minutes of my stream. Granted, if you missed the first um, hour and 25 minutes, I did nothing but talk. Um, so you really didn't miss anything. I didn't take any. That was the only trade that I took was this rebid of the overnight sell imbalance. You can kind of see that level here. It's 29,17875. This like negative 104 delta. And it probably was larger than that, but since we've traded through it a few times, um, this in motive wave, the delta volume, which is on the right side of my chart, can get watered down just as like, an aggressive buyer comes back through that level, etc., or trades around it in a really choppy way. But our impact study basically flags those and keeps them um, on the chart um, for the whole time. It doesn't care if we've traded back through them or not. So you can end up with your points of reference that typically are there right when they happen on the depth of market, but after enough trading through those levels, if you show up late, you wouldn't even know that this was a level you should be paying attention to. So it's not like maybe the sexiest study that we have, but um, it's another point of reference. So like without this level, if I'd been looking to fade the opening range, I probably would have got an entry that was a lot longer or a lot later. So our entry, I think, was like 84. It's like right above this level. And the opening range low is like another almost 20 points above that. So, in this case, it probably would have worked out okay, but um, in my opinion, just easier to, get a little bit better risk to reward there. The next update that we have for Scalper IQ is not a new study. We are currently testing internally. We're testing Discord alerts. So I can actually show that here because I'm testing them live while I'm trading. So if I go to all settings, you guys won't have this yet because you don't have this release. It's still being tested internally. Um, but you'll have an alert here that you can trade and um, you can put in basically have your own Discord channel. And once that's there inside of each one of the respective studies, you'll have an alert set up and you can check to see whether you want alerts on delta zones, on delta pivots, on exhaustion, etc. Um, each one of the studies, and you'll get a ping directly to your own Discord channel. So that's our next release, which we'll be releasing before the end of July. We're just in the midst of testing right now, so that you don't accidentally end up with 50 Discord alerts all at once or whatever other misbehaving things it wants to do until we sort of iron out any bugs. So we always have studies that are under development. Um, if you become a subscriber, um, we have a channel dedicated to what we call our lab, and we'll post different experiments and different types of studies that we're looking at, but no imminent plans to release a whole new study at the moment. We're only about a month and a half, maybe like 5 or 6 weeks, I guess, from releasing Impact and Phantom. So that was our larger Scalper IQ 2.0 release before it was just Delta Flow, and it was all concentrated in one study. So now we have our tick engine, which drives all the data, and then we have our studies, which are connected to all of that data and show all of your signals. So that's another hold of that level. I'm not trading anymore. I'm going to take my one trade and be happy with um, my 50 points of profit. Um, like if I can walk away from a session that's this choppy with profit, I am more than happy to shut it down. All right, guys, I think that this is going to be about it for me. It's about 5 after 10 here Central Time. We took the one trade here. And overall, just super, super choppy. On a higher time frame, that was another rejection back into this week's value. We did ultimately move the point of control down to 29,388 on the week. So we have a pretty clear double distribution happening between 30K and 29,350. You have one extra little volume node in here that makes it not a super clean double distribution, but um, the first test after breaking this and getting back into value failed. So I would say sellers have an edge, but I don't anticipate this moving a lot this session. But the longer it hangs out below the opening range low, the worse that's going to be for um, buyers. So good luck to anybody that's still trading. We will be back again at 8:30 Central Time, 9:30 Eastern on this Friday. So follow along on YouTube. You'll get notified when we go live. Thanks for hanging out. Come join our Discord if you have any other questions. Happy to answer them there for you. Cheers, everyone.